Here's a revised version of the article. Let's break down what we know so far about the recent developments surrounding Donald Trump's tariff strategies, though a few questions remain unanswered. After much speculation, we finally have clarity on what Trump meant by his Liberation Day remark. Let's start with the basics. Before Trump took office, US tariffs on imports from various countries were relatively low. There were also ongoing threats of tariffs on Mexico and Canada, which were initially proposed, then withdrawn, and could return at any time. However, for now, these are off the table. Under Trump, tariffs on China were gradually increased, first by an additional 10%, followed by another 10% on a second wave of goods. Now, we're looking ahead to what comes next, and we've finally got the details. This new tariff plan has two main components. First, there's a 10% baseline tariff across the board, which means every country will see a 10% increase in tariffs. This includes the UK, though for the White House, this is just the starting point. On top of this baseline, additional tariffs, referred to as reciprocal tariffs, will be applied depending on the trade practices of individual countries. The White House has examined both the tariffs imposed by other countries on the US and other non-tariff barriers to trade, and has devised its strategy accordingly. Regarding Canada and Mexico, the tariffs imposed on them in the past may come back into play. Additionally, the reciprocal tariffs will cause tariff rates to rise significantly across the board. Looking at specific countries, for example, China will face a 34% reciprocal tariff, which, when combined with existing tariffs, will push the total tariff rate above 50%. A tariff rate above 50% makes trade significantly more difficult, discouraging trade altogether. Vietnam and Cambodia are also under scrutiny, as they have been used as pathways for goods from China to enter the US. Despite this, Trump's administration remains focused on re-industrializing the US and reducing reliance on foreign manufacturing. The UK's tariff rate will increase to 10%, which marks a significant rise from previous rates. However, it is still more favorable than the EU, which faces additional tariffs pushing rates up to 20%. This increase will undoubtedly impact global trade and reduce the volume of imports to the US. As for the stock market's reaction, the decision to implement these tariffs was made after markets closed, but we saw a brief uptick in Nasdaq futures, followed by a significant dip. This suggests that when markets open across the US, Asia, and Europe, we're likely to see declines as investors react to the news. In addition to these tariff measures, there's another important development emerging from the White House. Senior officials are discussing a potential executive order to close what's known as the de minimis loophole. This loophole currently exempts small, low-value items from being subject to tariffs. It's a significant issue for countries like China, which exports large volumes of cheap consumer goods, often through platforms like Shein. These goods would typically bypass tariffs, but Trump's team is working to close this loophole. However, implementing this could create administrative challenges, as it would require managing the influx of small items coming into the US without clear tariff guidelines. Ultimately, Trump's goal is twofold: to re-industrialize the US and to generate revenue through tariffs. The long-term feasibility of this approach remains uncertain, especially in an era where federal budgets rely more heavily on income taxes and less on tariffs. Despite this, Trump remains committed to his vision of raising funds through trade policies, hoping it will both boost American industry and provide financial support for the government. As these measures roll out, it's likely that we will see retaliation from other countries, particularly in Europe. The global market will continue to respond to these shifts, and the full effects of these tariffs will unfold over the coming weeks and months. This rewrite maintains the key details but presents the information in a more streamlined and concise manner. Let me know if you need any further adjustments.